QPRTs. That is a weird sounding term, right? So it stands for Qualified Personal Residence Trust. If you have a taxable estate or you're afraid that you may have a taxable estate when you die, then this is a tool that you may use. So it's typically used for a second home, a vacation home, something like that. Not rental property. It's got to be something that you use personally, but we typically don't use them for your primary residence, although you could. In Florida, we probably would not do that because we have some very tough homestead rules that we don't want to mess up. So let's say you have a vacation home someplace and you think you might have a taxable estate. You can put this property into an irrevocable trust. And if the property is worth, let's say, $1 million, you do a calculation depending on how long the terms of the trust are. And instead of making a gift of this property worth $1 million and using up $1 million of your estate and gift tax exemption, the calculation may result in the gift only being valued at $400,000 because you retain an interest in this property, let's say for 5 years. So the value of the 5-year term that you've retained may be $600,000. Therefore, you've only used up $400,000 of your exemption, but you've given away an asset that's worth $1 million. Maybe when you die, that asset has turned into a value of $2 million. If you kept it until you died, it would be valued at $2 million in your estate. So you've effectively gotten a $2 million asset out of your estate, only using up $400,000 of your exemption. You can also rent this property back to yourself. So you're paying rent, getting that money out of your estate, and it's usually set up as a grantor trust. So you don't even have to report the rental income. So this can be a very powerful tool for somebody who has a taxable estate, passing it on to the next generation or to whomever you want to pass your assets on to.